So we're now going to be checking in with the top management of TCI Express. In the last 6 months, the stock is higher by nearly 29%. Year to date, however, it is in the negative territory. It recently came out with its numbers as well, where on a year-on-year comparison in the December quarter, it saw its net profit rise by about 4.5% to come in at 35 crore rupees. EBITDA margin, meanwhile, at 16.4%. Down from 17.3% year on year. So let's check in with Mr. Chander Agarwal, who's joining us live here on the market. Good morning, Mr. Agarwal. Thanks so much for joining us. We've had time to go through the results. We've seen the fine print. But going forward, I think one thing that the markets will want to know as well is you were protected for the quarter under review by fuel price hikes. So even crude was going up. We did see that, price of petrol, diesel didn't keep pace. Maybe it's because of state elections, maybe it's not. But this is not going to continue. So with fuel prices going up, what is it going to mean for TCI Express? What is it going to mean for your margins, your business, your pricing?
So I think the most important thing that drives the numbers is the volume growth and also the way the economy is moving. So both, I think, are very positive now this month. And I think even in the month of March is going to be quite positive. And we will definitely have possibly higher growth than Q4 of last year. January was, bad for everyone because we know that it was just something because the Omicron had just kind of like started or was in its peak. And we saw that it didn't really, the business didn't really take off that well. Now, if you look at Q3, it was again, Diwali was like not so much of a big furore as usually as it is compared to the year of the pandemic where it was all, pent up demand. And so obviously we didn't have that this year, or rather last year in Q3. And also the fuel price, as you mentioned, was like, started trickling in and was all of a sudden, it just came up as a shock. So we didn't really pass that on that diligently to our clients because Diwali was also around the corner. So I think in all sense, the demand and the cost had gone up. As we saw a little lower than usual growth levels in the Q3. But if you look at year on year, 9 months, we're up like 35%. And we've already crossed last financial year's profitability, the whole year profitability in 9 months.
If I were to see the TCI Express, client share, it's almost 50-50, right? SMEs as well as corporates. You're talking about how you held back on hiking prices. And the sense I'm getting is that you will now need to pass on the pricing. What kind, and will the SMEs be in a position to actually absorb that?
So we already did pass on the pricing. It was well accepted and the process is on. And I think this quarter will easily have like a 3 to 4% hike for sure. We also have a diesel price hike clause, and that is something which is diligently being passed on also. So pricing for us, for TCI Express, is not really a concern. And always what I believe is that there's always a demand of the economy. That's how that functions is more important.
Chander, if you were to really put this into numbers, what is the kind of new client addition and volume growth that one can expect going forward from you?
If I look at Q4, definitely I can look at about 25% volume growth, and that would mean that about 30% top line growth. So that is definitely a possibility, a near possibility. And client acquisition is something which is, it's a constant endeavor because it kind of relates to the branch network that we're increasing. So it's kind of like, the more branches we have, the higher penetration that we, are able to make, and essentially also have newer clients that were not in our fold.
So, how are the new business offerings doing? I mean, Pharma Cold Chain Express, your C2C Express, Cold Chain, Rail Express.
Rail pharma is doing really well, exceptionally well. And, the conversion of the air cargo to rail cargo, what we had initially set out to do, that's happening in a big way. And, the customer, and it's kind of like related to the number of branches we operate. So the branches kind of like that were doing air cargo are able to do rail cargo for the same product. And that's a big shift we are seeing. Obviously, it's small at this point, but the numbers are quite like, look very positive. If I look at the Cold Chain Express, the vaccination drive is on in the country. And I think that's also doing quite well. The C2C business is doing, has been a great acceptance in the market. It's a whole new concept. And we already have almost 100% growth in that compared to last year.
How much of your business you would say will get a flip as the world normalizes, whether it is from the impact of the Omicron virus or whether it is a second wave? Are there any businesses which will kick in this quarter, in coming quarter, which is not a new business, but it is surely normalization?
Absolutely, the surface business, the main business that is starting to exceed all levels, even 2019 levels. So that's going to be the first business that will see the positive benefit. And that's also the largest chunk of business that we are in. So I think, yeah, this is, we want, and it's also a direct correlation of the economy. So if the surface trucking business increases, it means that the economy is also on the right path.
Verticals you would say for the surface business?
Sorry?
The top three verticals, I mean, which are the top three categories within the surface business which you think will normalize?
So the Surface Express, which is like the door-to-door B2B business, is where we will see the maximum growth already happening. And that started like, we've started that seeing that in this month already. So that's where the real benefit will come in.
Are you looking at moving into B2C at all, or that's a big no?
It's kind of something that I'm not considering in the short term or long term.
I mean, I look at the growth which is happening in e-commerce. I look at what valuation, let's say, delivery in a sense is trying to gather from the market. Aren't you tempted to look at creating more shareholder value by going into B2C? I've grown up using your services as a brand. It's a great brand, moves into B2C. It could be a great combination.
Well, B2C, all that, that new world idea of valuation and all that is great, but I'm a businessman. I need to see bottom line. And if there is no bottom line, then why are we doing this? I think India is it's still not a mature economy like the West, where, we can do all these, play all these games. And the idea should always be first establish a solid business, and then eventually from that, possibly maybe 10, 15 years down the line, have something to do like this. But I think at the moment, the opportunity is to really make money and focus on what is where the potential is. Road sector in the US, just to give you an example, is 90% of how the traffic moves for cargo, and India is only at 70%. So it means that the manufacturing growth in India is also very high, is a high potential, and also that moving to road cargo is also quite high. So if we have the economy going to 45% manufacturing and the road going up to 80%, 80% of the economy for transportation, I think the potential is great over there. And I think this is where we can really grow.
Okay, so for 10 to 15 years, you will at least not look at B2C. You want to focus on what it is that you're currently doing. So, Agarwal, it's always a pleasure talking to you. Thank you so much for joining us live today on The Market.